All right, and welcome back for the episode of Carnivore Trades. Today is Monday, March 27, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, a couple of headlines today. First off, we have First Citizens Bank shares. That's basically trading at an all-time high here. And they bought out the remaining assets of SIVB. And they basically got them for free. So up 55% here. Probably about to be knocking on the door of that 1,000 handle there, but closing at 582 on Friday, and basically back to all-time highs here today. Another little headline to do is, today is Binance getting sued by the CFTC. So you saw a little bit of a algo freak out, on the news there on Bitcoin. We tested that low, and we hit that green bar low as well again, but we are above it. So we'll see what happens here. I want to take a look at the hourly. It's off the lows here. If this consolidates and goes lower, goes lower though, just be aware we got to watch that level again, 26,926. If we get a daily close below that, that would be a failure there. So just be careful. If that fails, this is going to, go right down to 25,000. So just be careful with Bitcoin here. Again, it's a little bit of an excuse to just sell, I guess. But, the pattern's not great on the hourly right now. You do have kind of an hourly inside bar. So we'll keep an eye on that. But, it's holding up for now. As far as the regular equity markets, Spider's, modestly higher here. Coming back off the highs here, that is about 337. So market's closing in about 25 minutes here. The Qs are noticeably lower, and this is something I pointed out to members earlier this morning, specifically the semis. So take a look at the semis, down 1.11% there. Doesn't look like a big deal, but it generally is. I never like to see when the semis can't get a bid with the rest of the market. It's generally a sign of weakness. The semiconductors, they're in everything. I kind of look at them as like the new transports. So just definitely a little bit of a yellow flag. Okay, we'll call it that. And we talked about this over the last week or so. I said tech probably is going to come in, and you'll see, the bank stocks. We can see the KRE getting a bid here up 1.4. XLF is decently higher, up 1.6. The Russell 2000 has a lot of regionals in it, of 1.34. That is the leader today. The highest, best performing index today. I see the Dow up 0.75%, but the Russell and the Dow would likely outperform. Take a look at the IWM here on intraday. It's basically at the highs of the day, and the spiders have not made, they did not take out that morning high like the Russell did. So, and the semis didn't get anywhere near it, and neither did the Q. So tech's starting to show a little bit of laggardship here, and it has been the leader for quite a while. And now you're seeing kind of the Russell catch up. The banks are catching up. You're seeing that money rotation out. And another thing that we talked about too is, where's money? It's kind of like the Apples of the world were kind of like a safe haven, right? Because you couldn't go into banks, which usually are a safe haven, but obviously, in a banking crisis, nobody's going to go hide in bank stocks. So they're hiding in big tech. And now you're seeing that kind of rotation come out. Another area that's seeing some rotation out is gold. So down 1.2, so 1.25, we'll call it, percent on the day. And again, one thing I've said is I'm not saying it can't go higher, but I'd rather see gold up because, GDX is confirming it. I'd rather see it for other fundamental reasons other than fear. I don't like it when it's up on fear. And now you're seeing fear subside. And I said, if that happens, gold can come in, and it has. So a little bit of movement here, a little bit of kind of like a, rotation going on here again. Russell and the Dow being the beneficiaries, the NASDAQ semis showing a little bit of laggardship. One area that's holding up okay is cloud. So that is green on the day. So cloud, it's actually not a terrible pattern there on the daily. You do have that big red bar, but if this consolidates further, this can go up there and attack that 300 handle. I don't think there's that much more. I know this looks like a bullish pattern, but you got to zoom out and take a look at those bigger time frames. That's just a big, let's look at the monthly. That's just a big bear flag. So again, I don't see a ton of upside here, but for right now, Market's holding up okay as long as the banks are holding up, and we're getting positive news out of that. And it looks like policymakers are stepping in, right? The markets can trade a little bit higher. I do think the markets are kind of in a little bit of a buoyant mode. We talked about this a lot lately. There's just a lot of hedges out there, right? There's a lot of shorts and not a lot of sellers, if that makes sense. So, not enough people selling shares, a lot of people selling short, and it makes it difficult for the market to go lower when everybody's hedged and when there's lots of shorts already in it. So I think maybe the market can trade up a little bit here. I'm not sure how long it can last, because it's a matter of time before the next shoe drops. People are already talking about commercial real estate. Deutsche Bank, I think everybody already knows about that. Commercial real estate is definitely on the docket, though, as are some other things here. But for right now, market's holding up. Spiders trading right around that 397 handle here as we get closer to the closing bell. And again, we're just kind of stuck in between these two trend lines here. So, we got a little bit of a test on, we basically tested that area this morning. We backed off of it, and you have this little nexus of that downsloping trend line from the February high that has held. I'm not sure what the market wants to do here. I know that right now 402.50 will be resistance on the daily time frame, but if this can chop around, this can push up, and then that would take you up to this next level near that 407 area, which would be pretty good resistance there for the spiders. As for the Qs, again, they're holding up here. I just don't see a ton of upside in it. Again, kind of looking at that IGV chart, again, everybody's focused on this up move, pullback, and then kind of another consolidation, but you got to use those bigger time frames. This is a monthly inside bar. So, unless you close the quarter above that, that's, which could happen. We're only 4 days away, so it could happen. But still bigger picture, it's a down move and sideways action here. So just be careful with that. I don't see a ton of upside. 320, that's your Jackson Hole pivot. There's a gap above that. So that's really all the upside I see in the Qs right now. But for now, they're holding up. We'll give them the benefit of the doubt as long as the market can remain buoyant, as long as they're keeping those banks held up. All right, over to the Dow. We kind of briefly touched on that. Again, you'll have resistance at that red bar high, same area on the spiders. 330 and 331 are the levels to watch. Russell getting a bid. Nice little reversal on Friday, follow through today. Doesn't look like we're quite above that pivot there. This really needs to get above 175, and then, this still has a lot of work to do. It's getting a nice bounce, but you've got a lot of resistance here. You've got resistance at the 200, even the 20. You got a gap window, a gap fill. You got the 100. There's a lot of, the Russell's not out of the woods. It's getting a nice bid. It's getting a bounce. We'll just leave it at that for now. Again, as long as the banks are okay, markets can move higher, and we'll just leave it right there. Anyways, SMH, we mentioned that already. I see a lot of resistance up here. I don't see a ton of upside for the semis right now. I think they are, pretty much exhausted and need to pull back. NVIDIA, everybody knows about it. It's still inside of this topping tail here. If it takes this low out, it can trade down to that 240, 243 area. So, and you have that, again, classic rising wedge and a classic fake out if I'm, making predictions here. So, very, very often you see these rising wedges, you get that initial pop, and then it drops. So anyways, semis, we covered that. Let's go over the transports here. So a little bit more rotation. So again, looks like this chart, the transports looks a lot more like the IWM and the XLF with that tail candle on Friday. Again, the semis are kind of the laggard here, and the transports are kind of the leader now. So still not a great pattern here. As long as this stays below 14,139, this is still inside bar bear flagging. So just be aware of that. It's getting a bounce. You're trying to reclaim the 200 moving average. We'll give it the benefit of the doubt as long as the market holds up, but this is not a pattern of strength here. So just be aware of that. All right, let's go over to rates here. So the 2-year actually coming in pretty sharply on the ZT. So down 42 bips, not a great look there. It is still, I'm just going to check my yield chart here. So no, it's right on 4%. So it's basically at 4.01 right now. And it's hovering. I'll just flip over here. So it's basically right on that 200 moving average there on the daily, right above 4% there. The Fed funds rate, though, the Fed does not need to hike right now. They might talk like they want to, but they don't need to. They're 83 points ahead of the curve currently. So they're fine right now. If this advances, that can change. But for right now, yields coming well, yield's getting a bid today, but they have come nicely off the highs. The Fed doesn't technically need to do anything right now. Let's look at the 10-year note. Again, backing off of that trend line. Again, I just don't see a ton of upside here in bonds right now. They need to do a lot more consolidation if they're going to move higher, and I just don't see it at the moment. They're holding up, so we'll just leave it at that for now. But just watch that 2-year yield. If that starts taking off again, it's going to be problematic. All right, over to housing, XHB, nothing's changed here. Down, move, inside bar, down, move, inside bar. This is still building a bear base. Same thing with the ITP. I'm really liking that bear pattern. By the way, VNQ, finally getting some follow through to the upside. Again, we basically went into the October lows. You got a nice engulfing, well, not quite engulfing, but pretty good reversal on Friday. You know, this is kind of a weak candle here today. Honestly, you'd want to see a little bit more follow through here. One thing I did read though, I believe it was, I want to say IYR. It's at the other one of these ETFs for real estate. This has 40% short interest, which is pretty high for an ETF like this. So just be careful. I told my members be careful of that. I know a lot of them have SRS. And they made some really good money on it, but it's now getting into support and there's a lot of short interest, so just keep that in mind. Anyways, XLF hanging in there. Again, similar candle to the IWM. Follow through today. We'll leave it at that. Again, 32.20, 32 and a quarter is still res. On the daily, broker dealers holding up okay. We'll watch that downsloping 20 moving average. If it stays below that, this can consolidate for a move lower, so be careful there. Crude here getting a nice retrace. That is getting into resistance though. You are coming into this big trend line, which you obviously broke through with a big bear base there. And now you have, a wide range breakdown bar and you're getting a retrace. Full disclosure, I did take a short on this today, just so everybody's aware. So I'm not pumping my own book or anything, but I think crude has to go down to $60 to $50. You guys know I've been saying that for quite a while now. Honestly, if this were to reverse and you get above this red bar, that's completely negated and you probably have a fake breakdown, and I think crude would go a lot higher. I don't have that penciled in right now. I think the first half of the year it's still going to remain under pressure for the most part. Later in the year, that may be a different story, but for right now, you got a breakdown and a nice little zigzag up. So I like crude here on the downside, so we'll just leave it at that. Very simple trade there. XLE again, just looks like a lot of charts. Down move and sideways chop. If this can't get back above this area, this could still be bear flagging, so be aware of that. XOP, same look. OIH, same look. It's a lot more volatile, but the same kind of look there. All right, over to Nat Gas here. So Nat Gas lower by 5.5% on the day. I am watching, I want to pull this up here. We have a falling wedge there. And let's look on the 4-hour. As we are just getting outside of that on the lower side. So again, a lot of the times with these wedge patterns, you'll get a push. Wouldn't even surprise me to see a test double bottom. At this point, it probably will. And that's probably where it'll get defended. I mean, sentiment right now is pretty much at suicide levels, like it was before it bottomed last month. So that's where it's going into. And you're going into, what's been the floor for the last, almost 20 years, really going back to 2001. So you have a nice tail candle to trade off of. This is where it should get defended if it's going to get defended here. But I'm watching that falling wedge there on the 4-hour. It's a pretty good pattern there, and it looks tight. And it should play out within the next day or so, which coincidentally, or perhaps not, is the contract rollover. So we'll be watching for that. Over the DXY, so dollar index lower, not a huge, nothing crazy here. I do expect 103.77 to be resistance on the upside. But the dollar trade's not over with. I think it can have one more little move up potentially. Then I think it probably wants to get back down to double bottom. At that point, I do like the dollar. Again, it will be going back into that. It's actually going to go into that 100 week moving average. Then on the monthly, again, there's that big pivot that's been a major area. It's never been back tested. So dollar index may need to go and tag that level. But we'll see if and when it gets there. Gold, we already touched on a little bit. That is off the lows. It's holding up okay. If this takes out 1936.50, then you can go down to 19 and a quarter. If it takes that out, then it's going to go, down to 1860. We'll call it 1865. Again, you guys know the level I'm watching by the end of the week. 19. It's right there, the yellow line, 1962.50. Close below that. Keeps you inside of a quarterly red bar. So in case you're not familiar, I'll just show you fast. And that's that quarterly red bar that we've been unable to close above since we made it in 2021. So you stay inside of that. Gold's probably not ready to break out. And as you guys know, I don't think it is anyway, because the miners are literally closer to 52-week lows than 52-week highs. In a real gold bull market, that shouldn't be, the miners should be leading the metal. So anyways, over to silver. Again, lower, nothing crazy, nothing terrible. Again, we knew this red bar would be resistance. We had a nice little tail candle on Friday, came back in. If this continues lower, 22.50 is going to be a short-term level there. Then $22 if it manages to push up. Again, obviously that trend line has been resistance for quite a while. Big channel there. Nice channel, by the way. I will say you do have a potential higher low here. So that could be something here. I don't have silver breaking out just yet, but we'll watch it. But those are your short-term levels there for silver futures. Platinum, actually not terrible here. I kind of like these little test candles. If this can firm up, again, I'm still looking for 1040 as long as that green bar holds at 960 spot 4. Copper here, a little bit all over the map, but it is green. Again, I don't see much upside in copper either. You guys know my level there. All right, Bitcoin, again, we already touched on it. I'll just briefly go over that one more time. Watch this level, 8 o'clock close, 26,926. That's really all you need to know. If it closes above that, this can still consolidate to go higher. If it breaks that, you're looking at 25,000. So pretty simple there. But that is what I've got for Bitcoin. All right, back over to the spiders here. They're coming off the highs a little bit. Nothing terrible. This just looks like backing and filling to me. And again, we've talked about this ad nauseum. There's a lot of hedges in the market. I think some of them just need to come off. That's really that simple. And as long as the banks kind of hold up, I think the market will be able to hold up, at least until the next shoe drops. So anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you all tomorrow.